S&P 500 fails to hold a critical level. Nasdaq makes another lower low out of a bear flag. Semiconductor sector is teetering on major support. UPST did not take the stairs down and took the window. We'll explain why. After hours, Disney's up $3. WYNN is up $2 on solid earnings. Tesla broke a critical level, and we'll talk about where it's heading next. SMCI absolutely decimated on earnings today, down 25%. NVDA finally cracks. We'll talk about where the target is. MDB breaks a critical level. We'll talk about why this is important. DraftKings forms the mother of all shooting stars. Apple's pattern and what it's telling us for tomorrow. CPI at 8:30 tomorrow morning. We'll be live for it. And let's talk about exactly what to watch so we're prepared. Ton to go over. Let's get to it. Hey, everybody. Welcome back. So we have a ton to go over. Now, what we go over today is going to change drastically, in my opinion, because of what happens tomorrow. So we have to talk about where we are technically. But as we always talk about, there's that three legs to the stool. And macro, then we have the fundamental leg, and then we have the technical leg. Again, excuse my childlike drawings, but you get it. And there's your little stool, and that's where you're going to sit tomorrow. Our weighting is going to be on this. Technically will be next. Fundamentally will be driven third. So you really are technically set up. If you only had technicals to worry about right now, you would not be happy, but you would be able to determine which way the probabilities are leaning, which we're about to get into. But it's really going to be on the CPI, which we are going to address, and I'm going to tell you how I look at it to kind of gauge what to expect tomorrow. Now, let's start with the basics. If we just very simply clean my stool off and my trend line for a moment, or support line, we've been talking about this for some time, and what you have here is you have that 12-22 cross. I use a 12, a 22, and a 55 for those that are new. You'll also, if you are new, you'll note that all these videos connect together, starting with Saturdays throughout the week. We cover everything. It seems that that makes the most sense, according to the comments, which I do appreciate. So, you have a little bear flag here. You broke down. Now you made a lower low. Did you close above 4,500? The answer is no. No, you did not. Okay? It's very clear that you did not. So, where's next? Where's that put us on the table? Technically, you would think you're heading right to here. So if we clean all this off and we just drop a line right to that, where does that put us? 44.33. That is very possible. And on a high CPI, to be completely candid, it could happen in a day. If you come in with a hot CPI tomorrow, hot meaning stronger than expected, you don't think you're going to drop 91 basis points? It can happen, and it can happen fast. Remember, we take the stairs up, right? We all know this. We take the stairs up and we take the elevator down. We've seen it 1,000 times. We're going to go through this tonight. That's the stairs. That's the elevator. So you get it. So 44.33 you need to watch tomorrow. You must hold that. Now, I'm already seeing signs technically, and this is where my head goes. I'm already seeing signs that we're probably not going to hold it, and I'll get into that. What's bothering me more than anything is the test today and then the lack of bounce. No one has any faith in tomorrow's number. Now, it can always come out and surprise. The majority of surprises have been to the downside. And we've gone through that ad nauseum. We've been talking about that the surprises are to the downside. And I hate saying it this way, but is this time different? So if we look at this on the hourly, we can see very clearly what we've been doing for weeks in the pre-market call. And remember, we'll be live at 8:30 tomorrow for this, and we will start before CPI, and then we'll just trade live. So we can see this right now. All right, we can all see this, I hope, but really what you have is you have that left shoulder, you have that head, and you have that right shoulder. So left shoulder, head, right shoulder, neckline, test, fails. Test of the break, fails. Test of the retest of the break, fails. Lower low, lower low. Which way do you think we're heading? Now, I'm going to save everybody a lot of time, and so you don't have to take a course that's going to charge you a ton of money. See that line? You very simply click the clone button there on TradingView, or any system has that, and you can just put in there and you can see your channel. All right? It's not rocket science, guys. Real simple stuff. You want to have the same trajectory on both sides. Now, when you see that, you have a downward channel that just rejected a neckline. You want to buy that? The answer is no, you don't. So what you want to do is you want to see how this plays out, right? We don't know what's going to happen. We don't know that CPI could be miraculous and we could rally. There's a whole myriad of solutions that could happen. We could even have a good CPI rally and then fall down, and I'll tell you why that might happen. It's very possible that we have a good CPI tomorrow, meaning lower than expected, right? Let's say that they have a good CPI and everyone's predicting it to come in line. But let's say it's better than expected, which they have been. They might use that liquidity of demand to sell into it. because it's very clear that institutions are retail from whomever. It's probably more retail right now, because if we look at smart money, dumb money from Saturday, it's more retail dumping. They want out. They're getting out of the way. Institutions have actually been increasing a little bit here, but it seems that they went out of the way. And so we're seeing that dumping, and that's usually people that are under 20 billion. So, that's how they do the dividing line. But if you take a look here, here's your line. You close below it. That's not debatable. I mean, these are just very simple facts. Now people say, well, you just close below it a little bit. Okay, well, either close below it or you don't. I mean, you either broke or you didn't. Now, it doesn't mean that you can't get back above it, but this is the hand that we're dealt right now. And we were talking about this for some time, and let's just go through it before we put our lines in. Lower highs. Here was the neckline that we talked about, the mini neckline that we did not want to break. We broke it. Very clearly, we broke it. We formed a bull flag or a bear flag here. Here's your flagpole, and we broke it. And now we're breaking major support. Okay, so now we know that we're breaking that support level. Let's clean all this off. And let's just drop in some moving averages and see what they're telling us. All right, so there's a couple things that this chart's telling us. One, we very definitively have a 1222 cross to the downside. This is irrefutable. When was our last one? Our last one to the upside was right here. They touched here, and they kind of touched there. But this is a cross, period. You've crossed. Okay, your last downward cross was here. Even if you negate that cross and say nothing happened, you still went sideways for 2 weeks. Let's give it the benefit of the doubt and say maybe we're going to go sideways. I would argue that when this cross happened, we were already down here on the RSI, so you weren't this high off where you are now. All right, so now you're sitting right here on that 55. Again, I use a 12, a 22, and a 55. This is your RSI line right here, 50. Okay, so now we have the 55 here, and we broke the 50. How does an index perform if it's below the 50 on the RSI? Let's not guess. Let's just kind of mark off a couple spots and see what happens there and see if there's anything that you could take away from this. Well, we just touched it there, but let's just look at that. Okay, so if I mark all those blue lines, and let's put this one right there. So if I put all those blue lines there and mark all those off, and then we just go there and just very simply drop a line right there. How'd we do there? Well, we were down, okay? Well, how'd we do there? Well, we went lower. How'd we do here? Well, we went sideways to down. And then you went here. And then what happened when you bounced off the 50? You reversed and went back up. All right, so the last 4 times we broke in the past 12 months, that 50, for the first time, we went lower. All right, that's irrefutable. You have to think that that's going to happen again. Now, look at this on an hourly. Now, if we drill out of this, you're going to just see some real rounding here. If you just look at this, all right, and you should be able to see this. But I'm going to put this in this way so that we can say it and you can see what I see. See that rounding? Okay, that's not great. We talked about the trajectory in the fan here and how the fan was getting worse, not better. Okay, it's getting worse. We're rounding. This is not great. So what does that mean? It means we have some levels to watch. We had to hold 15,250 today. We didn't hold that. And so now you look at this and go, well, where could we break to? Well, the very first, most glaring, besides that 55-day moving average, is 14.6 to me. That's where I think that you might find some support. You could say that, well, we could stop at this 14.89, maybe, but I don't really see much at 15 that's going to hold us there. I really don't. Now, if you drill into those levels, you might want to screenshot those for tomorrow. But if you drill into those levels and then you look at where that level is sitting, right on the 55, I just don't see how you're holding. Now, maybe it's going to be good and we are. I just don't see it. It doesn't mean I'm right, but it's not something that I would bet against. And I think that you got some telltale signs today. Now, I'm spending a lot of time on this for a reason. And we're going to get into the stocks, and then we're going to go in alphabetical order again, because there's a lot of ground to cover in very little time. And there's some things here that we need to go over and address that you need to be aware of before tomorrow. So here's the stocks. What are you sitting on? The blue is the 55. Last time you cracked the 55 was here. Even if you're saying, well, we only went from 420 to 400. Okay, that's 5%. When you break. Do I want to go through another 5% here? You guys will remember rule of 3, right? So if the index breaks 3%, then the major sectors will go plus or times 3 to that, times the stock 3. A 5% move on the stocks would be a 10 to 15% move on the leaders. What does that mean? It means NVIDIA, okay? That it could be down 10%, 15%. Look at this chart. Look where it's sitting. We're going to get to it in a moment. So, and just again, rule 3. So if the index can drop 5%, the leaders in there can drop 3x that. right? Just like if a sector drops 2%, there's a really good chance that one of the major sectors out there dropped probably 5 or 6%, right? It's usually how it works. So if you take a look, it's back of envelope rule of thumb, but it works. So if you look at this and go, okay, we're sitting right there. I'm sure we're going to hold unless there's some data that we could use that's going to point out something glaring, then maybe we should pay attention to that. Well, we have this negative RSI that we've been talking about for weeks. Well, that's pretty glaring. Okay. And now what did we do? Well, we just broke 50 on the RSI. Do I have to go through it again? What happens if we break 50 on the RSI? We tend to underperform, don't we? Right? Don't we? Okay. First time down. Do we underperform? Say it with me. Yes. We underperform, right? Just like when you break above it for the first time, you outperform. It is a really great demarcation line. It's not going to tell you the entire magnitude of how high or low you're going, but it does give you one more data point as who's in charge. So if we take a look at this and we see that RSI, and we just do something as simplistic as go back to these averages, you have your cross up here, you're dangling here, and the last time we broke this, we were down 5%, okay? So let's just assume that's all we're gonna break. I would make an argument that it's actually gonna be worse than that because you're in this channel and you're breaking this channel. So my argument would be a little different where I would say, well, you're in this channel and now you've broken it. So then I would count to the low of the channel that you just broke. So you break that channel, I would just say you're coming to here. That's 5.5%. Well, there you go. So I actually thought it'd be a little bit more like 7, but there it is. And all you do again is if you want to see the validity of that channel, you just clone it, right? Isn't that fascinating? That's what algorithms do to you all day long. Anyway, so you can see that how you're dangling right here. You can see the crack, right? You can see where we're sitting. Okay, so let's start going through the names. You got to watch this tomorrow, guys. You break this SOXS. We were talking about this past couple of days. A couple of people did it. We are in NVDS in the room. I have been doing quite well with this one. I'll show it to you. Kind of wonky after hours, isn't it? We just drill into this so you can see it and take a look at it. UPST, we had a really good trade in today. I'm going to walk through that so you can see it. Basically, if you want to see a video on the actual trade live, I have all the video and I have all the raw footage. I can put it together and get it out Sunday. My question with these videos is when you put them out, you're talking, how much money people made and things like that. I just don't find that helpful. I find it ego driven. So any comments about that are helpful. Maybe I'll just put the trades out and not talk about the dollar amounts. Any feedback on that's okay. I just find it, in poor form, but any feedbacks I appreciate. Anyway, you can see right here your level, tried to break, could break. What'd you do today? Broke out. They had a rebalancing. Someone bought $1 million worth of calls on this yesterday. $1 million worth of calls. It's like 500,000 shares of this they bought. The assets under management are only 100 million. So they tells you where people think it's going. This is kind of wonky to look at. So we'll do it this way. Let's do it on the hourly. That'll probably be cleaner. So it's funny, I posted this chart on Twitter and I said, would you buy this? And everyone's like, no. It was interesting. I just put it out there. I didn't tell people what it was. Anyway, we're in this in the 770 range and we've done quite well with it. I think we're right around that 772, 70. Yeah, I think it was somewhere around here. So what do we have? About 8% in it now. This looks to me like it's going to be an absolute monster. So I like this. If you don't like this and you don't want to do that, SOSX is another one that we've been talking about for some time. That is clearly breaking out here on the hourly. On weakness, they're going to hammer tech. If you start breaking those 55s, you might want to put alerts on them. You start breaking those 55s tomorrow, you're just going to see a world of hurt. An absolute world of hurt, in my opinion. So keep that in mind. I'll show you them. They're the simplest trades in the world. So this is one, we're long this, AAPD. We're doing well with it. Let me clean this all off. We're doing well with it. To me, it looks like it's got massive potential, but these are really simple trades, guys. So you see how we broke the 55 there for the first time since we cracked it back here, right? So, and I have a channel right here. Top of the channel takes me to about 27. So this could get really ugly, in my opinion, for Apple. Apple today broke down. Look at how you undercut right here. The only reason I think you might bounce here is because you're so oversold so fast. That was the only thing that got me, but I actually shorted more today and actually bought more puts today. I did quite well with them. But this rally, we went through this last night, and this is why I say all these videos are connected. The flim-flam was real. So all they did today was pop people over the higher high, popped you over the doji, and then just did a little Karate Kid, sweep the legs, right? And then just drop you and take out a low. So now I've got a red bar on a bear flag under the 55 that encapsulated the only green bar. Where do you think that's going? Okay, the only thing that's saving you is that you're oversold and you can stay oversold longer than you can imagine. So when you look at this, barring some CPI news tomorrow, this is heading lower. And if you really want the count, you have some room here. I mean, where are you going to stop? 160? I mean, where do you stop? And some of these levels we talk about, I'll go through them. But again, you don't take the elevator down, you take the window. We're going to get into it here for a couple of these names, but you can see how this is playing out here. Okay, maybe you hold here, maybe, but if you crack there, that's a long way down, guys. I don't see it. I really don't. You're going to have some minutia in here around 157, but you have nothing to the 200. It'd be a great spot to buy it, but I think that could really crack. Now, AMD, I just want to point this out. We've been talking about this for about a month now. The devil horns pattern, the crack. Then let's clean this off real quick. We can just talk about this and what's happening here. So you have this line going straight across, right? And you have these two devil horns sticking out here, little devil face, cracks, boom, can't get over, rallies, back down, reversal, 1, 2, 3 up, cracks down, very powerful pattern. And then you see you're in here. Now you have this whole base in here. Now, this is where it gets interesting, because if you just take out some of the noise and you just say, well, let me just see where the institutions are. Where are the institutions with that? Yeah, the institutions are actually selling further and further away from the 55. It's really bearish. I mean, I would love to be excited about semis right now, but you just can't be. I would watch this. I'm still short this, and I have puts. I just think I should disclose some of these things so you understand my positions. DraftKings, we all couldn't figure out why they were selling on good numbers. Somebody always knows. You gap down on the Penn news, and that is great news for ESPN and Disney, by the way, guys. You gap down, and here you are. I just don't see how you're not going down at least another dollar to test the 55. I just don't see how there's just not the easiest trade in the world right here to like 26 3/4. It just seems like an absolute layup. There's so many things going for it, right? I mean, here's your, maybe you could say it's overdone, but you're not overdone. You're definitely not overdone if you're closing at the low of the day, are you? I mean, we don't really even have to look at the volume. You're not overdone. People couldn't get out fast enough by the end of the day. So I just don't see how you're not coming down probably another $2, $1.50 at least. And this is really bad news. I mean, ESPN is going to broadcast their sports betting app everywhere, or whatever their partnership, they are going to promote the living heck out of that thing. And I think that's very important to understand. I want to go through MDB for a reason. It's very important for people to get this. This is a company that beat, hands down, earnings, completely clean quarter, completely clean beat, okay? Beat, and what happened? 200%, raised guidance, below the 55. You're down because Datadog came out with bad numbers. So you're thinking, oh, okay, well, we'll hold in here. Guess what it didn't do? Hold in here. So you cracked. What are you below? The 55. Start using this as a demarcation line. Your life will get easy. NVIDIA. So we started shorting this up in here. You cracked here on this little rally, and we started talking about this actually. We've been talking about this for about a month, sadly. We were long this and did very well with it. But when your process tells you to get out, you get out. So you'd see that 1222 cross, you're in here, got that little flag, you broke down. And we were talking about this today, and geez, where could you get to? I said you could be at 418, I figured. You have to realize that these lines move, right? This line's gonna move every day because it's a 55. They're all going to move, but you're going to move up. So my target was 418. I said we could be there by Friday. We were at 421 today. I was off by $3, and I still have 2 days left. So again, you're breaking the 50 on the RSI. Does not mean that you're going to plummet down. It just means that you're going to underperform. And you can go run through thousands of charts and just go and look at exactly what I'm giving you right here and tell me that it doesn't. Give me charts that show historically that we don't underperform here and we don't outperform here. They just don't exist. Okay, it's just a really clear demarcation line. There's a reason people use these. Tools are like nothing else, right? If you put a hammer in my hand, I'll be lucky to hang a picture straight. In someone else's hand, they're going to build you a house. Tools are what you make of it. It's who's wielding them. So you have to watch this tomorrow and watch this 55. If you crack that, you're going to open up the floodgates, and that's going to get really, really ugly. And we had 2 really good trades in that today in puts, and candidly, I'd be short a lot more overnight right now if we were in a position that I didn't have CPI tomorrow. And remember, CPI is followed, right, by PPI, okay, the next day. So SBI is one that SLB is one we bought today. Start focusing on these names, guys. We went over this yesterday. Just start focusing on these names. I'm just throwing it up there so you pay attention to it. SMCI, again, took the elevator down. This is not done. They're not done puking this. Okay. Whether or not it goes down tomorrow or not, you do not gap down like this, have a long, nasty red bar like this, and miraculously reverse and go higher. It just does not happen. So what do? You wait for it to take out the low, and you probably look for a short position. Or you rally up to here and you start a short position. Either one of these, there's some kind of short position here that we should be looking for, because this can get really ugly. It is not normal for any stock, no matter what, okay, to go up between 2 quarters. It's not realistic. It doesn't mean it's not a great company. It's just got way ahead of itself. And now, you take the stairs up and you take the window down. Tesla, I want to talk about. You closed where? Below the 55. See, do you see how when I say I'm a pattern trader, why I'm a pattern trader? See how easy my life is to make decisions? We're below the 55. RSI is below the 50. My life gets very easy doing it this way, guys. Once you start getting this stuff, and then you just start putting your own process around it. So when you start seeing stuff like this, you want to pay attention to it. I saw this, and it was actually in the newsletter. Let's pop it up here real quick. So if you don't get the newsletter, it is there's a free version, and this was in the free version. I'm just going to pop it in here so we can just go through this really quickly. I thought this was really fascinating. This is by interns, people that are interning on Wall Street. What car do they want to own? Well, last year, and I just thought this was neat, it was Tesla. You had to own a Tesla, and that they were number 1. Well, now it's Mercedes, Tesla's number 2, Audi, and BMW are catching up. I thought this was really very interesting. And believe it or not, people would rather own a Rivian than a Cadillac or an Acura. I thought that, for interns, I thought that was somewhat fascinating. Let's save the CPI for a minute here. UPST right through that 55. So this trade was very easy for us. And I'm just going to walk through exactly what we did, and then you can do this yourself. So what you do when you have a massive move like this on earnings, either up or down, you mark the pre-market high and low, right? So here's your post-market and pre-market low, right? And then you mark your post-market, and pre-market high, okay? See it? It doesn't get more obvious than that. If you broke out to here, so what you could have done, and what I was doing was, if I broke out to here and then I hit, let's get rid of that for a minute. It was the wrong one. If I broke out to here and then I came back down, retested, well, maybe I wanted to go long, but that's not what we did. What we did was we broke here, and then when that broke, I looked for the retest, which happened right there. Once we retested, we went short, and that was it. And I did stock, the 40s and the 39s puts, and we did quite well. And then as it just scaled out as it went down, I did not catch all this. I'll walk through, I have the trade live, so I'll walk through the whole thing live, but I did exceptionally well with it. And if these types of videos are helpful to see them live, just let me know, and I can put that together for Sunday or get it out next week at some point. So, but just let me know if they're helpful. What do you do now with this? What do you think the chances that somebody that's in that wants to hold it? Okay. All people are doing that are along this right now is they're waiting and looking for a bounce. That's all they're looking for right now. A reason to sell. Nobody is looking at this right now and saying, I really got to buy that. Nobody. All right. You might get a bounce tomorrow, and those bounces will be sold. Money is transferring into the defensive names. You're seeing it go into the XOP. You're seeing it go into these names. We talked about this yesterday, guys. We talked about these reversals. The beautiful thing about days where you pull back is that you can get these kinds of reversals. And that's really very important. I have a bunch to go over here still, but I want to go over it cursory because I don't want this video to be too long for a weekday. So you can kind of see the slope here on WYNN. I just want to go through this because I actually thought this was a very good quarter. You beat revenues by 4%. You're up by 42%. These kinds of movers, this is what you want to look for tomorrow. These are the kinds of names to look for. Disney's at 89.40. You're trying to trade up here. He had some really good comments. So if I was DraftKings, I would not like this. CEO Iger says company will explore partnerships for ESPN. The fact that he's doing that is exceptional because it is an asset that has been so undervalued that it's just absolutely silly. And the fact that he's going to do something with it is important. He's also going to raise prices, Hulu, Disney Plus, and I think that's a really smart idea. And I think they'll benefit from it. I would watch this tomorrow. People are going to be looking for these slower movers. This is a smaller one that you can watch for tomorrow. We actually traded this after hours in the room. VTGN, I believe it is what it is. I'll pull it up in a moment here. VTGN Therapeutics. I know nothing about it, but these people came out and they're trying to buy, another almost million shares at $23 for a stock that's trading at $9. So obviously they think something's going on there, and we're seeing it trade up after hours. So you can see it at 882, closed at 7 when that news hit, and you found that they actually paid up here for 1 million shares. Obviously somebody has faith in this. I would just keep this one on your radar for tomorrow and go from there. Now, for tomorrow, just screenshot this so that you know what to look for. Month over month, 0.2, 4.7, 3.3, year over year. Month over month, 2.2. The biggest ones you have to watch tomorrow are this year over year. I'll tell you exactly what I don't like at all. You see this 3%? You see this 3.3%? This is the first time we're doing this, that we're actually saying it's going to go higher. I'm not crazy about that. I'm not crazy about they're telling us that core is supposed to drop. Right? Core is supposed to drop, but CPI year over year is supposed to go up. Well, why is that? Now, for those that are new, and I apologize for this video being a little bit longer than I'd like to do, but there's a lot to go over here for tomorrow. But what you're going to note is I like to do like a rule of thumb. So this is crude oil. Now, if I go here and I go April 1st, it's the 3rd, but we're close enough. And then you go here. And what you do is you would just go from this date on crude oil, and you would drop that right to the close of that bar. And you go, okay, well, crude oil is down during this period of time in April, 6%, okay? And then you would just go May to May 31st, and then you can kind of go through and watch exactly what I'm doing again. And you're basically going to that opening bar and the close of that bar. And you're gonna say crude oil is down 11%, okay? This is affecting everything in our lives, crude oil. It's affecting everything in CPI. Okay, and I know they take it out in core, they take it out through food and energy, but you know what? You can't take out transportation costs, period. You can't do it. It doesn't work that way. So then you come here to this month and you take a look and you go, okay, well, for May, how'd we do? And you start looking through this and go, well, we're about even. Okay, well, now we're even. And then you go into here for July, right? So June, July, okay, because that's what you're gonna focus on now. Now, this is where we closed and this is where oil is. Huh. Okay, you haven't had a move like this in crude oil. And this is one of the things that concerns me about tomorrow. We haven't had this. Now, the other thing that you can do is go, well, you don't put crude oil in your car. Okay, well, maybe you do, but you don't. So then you go take a look at gasoline futures, and you can extrapolate it out through gasoline futures. And you just go, okay, well, and again, this is just a back envelope way of doing it, but it usually gets me pretty darn close, okay, to whether or not I'm going to be higher or lower. You want to know why they're saying it's supposed to be higher? Okay, let's well, we don't have that day. You have here. That's the second. So you have here, right? So you're up 15%. So I'm up 15% in crude oil and gasoline going into CPI tomorrow. That is something that has given me a little bit of concern. That's it.